Hi, I'm Ron Goldstein, and in the next few minutes I'm going to be talking about the housing economy in Metro Denver for the third quarter of 2012. So here's what we're going to be looking at today. We're going to be talking about unemployment rates as it affects housing. We're going to be talking about housing affordability in the Metro Denver area. We're going to also talk about home sales and what's going on, the interest rates, and then we're going to talk about foreclosures and vacancy rates, and then finally wrap up with absorption ratios so that we can understand what's going on in the marketplace. And then I'm going to wrap all that up and give a little projection of what the next few months might look like. So let's talk about unemployment. That's kind of the bad news. Unemployment has remained fairly stable at the 8 to a little bit more level through most of 2012. This past month, they're recording a 7.8% unemployment rate. A healthy rate would be below 6%. And so as people don't have jobs, people still struggle to purchase houses. In terms of affordability, Denver is ranking 31st out of 52 in major markets in the U.S. for its housing affordability. So one of the things that we have is a fairly expensive housing market, but we've got excellent interest rates, and that's making affordability somewhere in the medium area. Here's what's going on statistically as of September in Metrolist statistics. What we see is 18% increase in home sales over just last year. You also might note that there is a drop in home sales since the prior month. This is due to seasonal adjustments and nothing to be concerned about. We see the amount of homes decreasing in autumn and winter every single year. And here's the other good news. The average sold price is up 11% off over last year. So here are the solds year after year, and you can see 2007, 2008 started to drop, and the amount of homes being sold, it was down. But we think this year is going to be up considerably over last year. Interest rates remain the bright spot of all of housing at all-time low levels, 3.5% or less for 2012. This is making homes very affordable for buyers, for investors, for first-time buyers. The other good news is that foreclosures are down, a drop of about 25% off of just a year ago. And this is excellent news for us. 26% drop according to the Colorado Division of Housing since 1 year ago. And that's great news for everybody. And in theory, as prices go up, fewer and fewer houses should be underwater and fewer should be short sales or foreclosures. Colorado is the sixth best state in the nation for non-current loans, and that means most people are doing better, and we see a decrease of 13% from the same time last year in people who are underwater on homes. We also might take a look at housing starts. Those are what new home builders are doing. We're seeing a small upswing in new home starts. It's nowhere near normal and certainly nowhere near the boom years, and that's going to take a long time before we see builders come in. But with the small amount of availability of houses on the market, there's a greater likelihood that 2013, in the spring, we should see more new home construction. Vacancy rates remain incredibly low, and that means there's great optimism for those people who are thinking about buying properties as investments. They're going to have very low vacancy rates. They're going to get great cash flows because the marketplace right now has terrific interest rate for non-owner occupied investments. Actively, we're seeing fewer properties on the market, a decrease from 1 year ago of 32%, which is just huge. And so we see only 10,000 properties on the market. Anecdotally, what we're hearing is the buyers are getting frustrated. They don't have a lot of choice. And when they do find that great property, multiple offers are coming in and things are having to be bid at full price or sometimes even higher. We can see this in terms of absorption ratios. This is the 7th quarter in a row since the 4th quarter of 2010 that the absorption ratios are down. What that is if you take the total number of listings and you divide that by the total amount closed, it tells you how much you have to absorb in the marketplace. And we are really at historically low levels. So here's where we are now. Prices are going to continue to rise because buyers are going to continue to want to buy. And so all through the winter months, we're going to see prices rise. We're going to see fewer and fewer properties for sale because a lot of people pull their properties off the market in the winter time. We're going to see seasonal adjustments for the amount of properties that sell. And what this means is that it's going to be an excellent opportunity for buyers to try and get into the marketplace. We're going to continue to see extremely low interest rates, although there's some rumors from the Fed that 2013 we might see those interest rates go up slightly to adjust for inflation. We're not going to see huge increases, but we could see slight increases. Every time that interest rate goes up, it gives a little bit less buying power for buyers. So here's the thing. Now is the time for a buyer to jump in. Whether you're a first-time home buyer or whether you're a shrewd investor, you're going to get the best return on your money that you're going to get for years to come because the housing market has definitely shifted and shifted in a very positive way. I'd like to thank you for sharing your time with me today. If you have any questions, please contact me at 303-930-5206. My name is Ron Goldstein with REMAX Masters, and thank you again.